Hey everyone, in this short video, I wanted to highlight what's going on with Carnival Cruise stock. So let's get right into it, digging into the company's earnings conference call. So in their second quarter, they outperformed the guidance. In other words, management thought they were going to achieve a certain level of revenue and profitability in the second quarter, but it turns out their results came back better than expected. Now, that's for a number of reasons, namely due to better than expected consumer demand, right? The cruise ship operators like Carnival expected customer demand to increase as economies have reopened, as people have gotten vaccinated against COVID-19. But that rebound, that recovery, has been better than expected. So that's one reason why the company's second quarter outperformed what they initially thought. In fact, the second quarter was so good, and I think we might get into this a little bit later in the video, that the company said, you know what, the rest of this year, we got to raise our expectations because things are looking much better than we thought. So the improvement was driven by $108 million in favorability in revenue from higher ticket prices. So Carnival Cruise Lines, like many other companies in the world, have raised prices, and to their surprise, customers have maintained or even increased purchasing. So they thought, hey, when we raise prices, customer demand will go down a little bit, but that hasn't been the case. They raised prices and customer demand continued to go up. So I mentioned earlier their for the rest of 2023, their cumulative advanced booking position is at higher prices when compared to 2019. So pricing is above where it was in 2019. And with the strength in booking volumes above 2019 levels, we are in a great position with less inventory remaining to sell for 2023 compared to 2019 to achieve our guidance despite the 5.7% capacity increase in the second half of the year. So let me break this down a little bit. So what management is saying is that the level of reservations that they have for the rest of the year is better than at the same point in 2019, even though in 2023 they have more availability. So more space is available, more bookings are available, and even though they increased the availability, they're still in a better position than they were in 2019. That just further goes to demonstrate the strength in customer demand for Carnival Cruise Lines, and I wouldn't be surprised if other cruise operators are experiencing similarly robust results. And for the rest of 2023, occupancy is expected to be at 100% or higher. Higher than 100%, how can that be? How can occupancy be higher than 100%? Well, that's for the fact that sometimes rooms are occupied by more than one person. So in that way, occupancy can be greater than 100% if all the rooms are filled and some of the rooms have two or three or four people inside of the room. Occupancy would be greater than 100%. So, I mean, to wrap this video up, I think the takeaway is that customer demand is better than management was expecting, and management already had expectations that demand would be rebounding because they were closed, they were shut down for so long during the pandemic. So it's good news for Carnival stock investors that the rebound, the recovery is stronger than expected. All right, so that's all I've got for this video highlighting what's going on with Carnival Cruise stock. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.